Hello everyone, Ugodro here, and this is my money brief. Yeah, so on today's money brief, I want to talk about public debt. Yeah, if you're a Nigerian, you should know by now that the country owes a lot of people. So, we owe, multilateral lenders, we owe countries, and then we even owe ourselves, some of us who lend money to the government. Public debt is basically the total amount of debt that a country owes to, its domestic lenders and then its foreign lenders as well. And so Nigeria is also a debtor nation, just like every other country. In fact, I think the United States is probably the most indebted country in the world. So nothing to be, worried about or to be ashamed of. But Nigeria's latest debt numbers, which the Debt Management Office released, during the week, is one that I sort of want to, touch on, because there's a number of things here that I think you should know and I want to break down. And so, according to the DMO, which is an acronym for Debt Management Office, total debt. So our debt is usually divided into domestic and external debt. So total domestic debt is 71.2 trillion naira. Yep. And of course, external debt is $42.9 billion. Now, usually when you hear numbers, it's always good to put it into context or comparison, because that's when it kind of makes sense. And so if we look at where we're coming from, so March, total domestic debt was 65.6 trillion. And then in December, it was 59.1 trillion. So you can see that domestic debt has actually been progressing. So we've gone from 59.1 trillion in December to 71.2 trillion in June this year. Now, if we look at June last year, so like we're comparing year on year, it used to be 51.1 trillion, 54.1 trillion naira, essentially when the current government came into power. So we've seen, the exchange rate go up from 51.1 trillion to about 71.2 trillion in just a year. So what basically was driving, increase in domestic borrowing? Just FGN bonds. So the government has been borrowing a lot. So FGN bonds have gone up from like 41.9 trillion a year ago to 52 trillion currently. So that has been a major jump. We've also seen Treasury bills go from 4.7 trillion to 11.8 trillion. So that's essentially the largest jump that we've seen, and the major driver for Nigeria's local borrowing or domestic debt. Then the next one, of course, is promissory notes. Promissory notes has gone from 780 billion naira to 1.6 trillion naira in a little over a year. So Treasury bills, we all know why that's been going on. That's basically been going on because the central bank has been borrowing, just so that they can suck money out of the economy and stabilize the exchange rate. In exchange for that, you're seeing this high interest rate of maybe 25-26% that we've seen on average this year so far. So that is why you've seen that go up, and that's CBN's way of mopping up money from the economy. And promissory notes, a bit of a concern, because promissory notes is basically debt that the government is owing to its suppliers, or contractors, maybe all oil marketers, people who import petroleum products. So government owes them. Remember when we're still doing subsidies. So government owes these guys, and if they can't pay them immediately, they give them promissory notes. So it's almost like, I promise to pay you. And so that's also a debt, and that's the one that has really gone up. It's more than doubled in the last 1 year. So essentially, that's Nigeria's domestic debt. Now, on the foreign debt side, it's been a bit stable, if not even lower. So a year ago, we had $43.1 billion, and today we're at $42.9 billion. So we've seen stable foreign debt. But if you do an exchange rate conversion, then in naira, you know what that means, because this time last year, exchange rate, well, when I say this time last year, I mean June 2023 to June 2024. If you compare, exchange rate was about 750 at that time, and we all know exchange rate is about 16 something now, so more than double. So if you did do the math, you see that in naira terms, our external borrowing has essentially gone up. So if you look at our total debt in naira terms, we're probably around 835 trillion. That's huge. And then compare it to December last year, when the exchange rate was like 900 naira. it was about 97.4 trillion. So huge differences. And this is, of course, because of exchange rate. So if we go back to the external borrowing, most of it is essentially Eurobonds. Then we have some countries that we lend, we tend to borrow money from, like China. China is one of Nigeria's largest countries that lend them money. So, China is about $5 billion. Interesting thing is that US, we don't actually borrow from the US directly. But US does lend indirectly as well, because they're basically the highest lenders to the IMF and the World Bank. But to the World Bank, we're owing the World Bank $16.3 billion. So that's like Nigeria's largest foreign lender. IMF 1.6 billion. And then if you look at Eurobond, like I mentioned, we have about $15.1 billion or thereabout. So that's Nigeria's public debt in a nutshell. Now, remember I talked about you have to compare to previous levels. You can also compare to the economy in general. So Nigeria's debt to GDP ratio is now 55%. Yeah, and that is significant because we've always touted debt to GDP ratio as one of the lowest things that we have, like compared to most other African countries. And government officials tend to always say, look at our debt to GDP ratio is great, nothing to worry about. What we tend to worry about the most is debt service to GDP ratio, which essentially is the debt that we need to pay now versus, revenue. Debt service to revenue ratio. And at some point it hit 90%. So that used to be the concern. But now we're seeing debt to GDP ratio climb. And that's because there are two things going on here. So our debt is rising because we are borrowing more locally. And then when you convert it in naira terms, because the exchange rate is depreciating, so the dollar component of our debt is also rising in naira terms. And then on the flip side, our GDP, because it's in naira, it's also not like growing as much. And then even GDP in dollars now is a lot lower. Remember, we used to be Africa's largest economy, but we're no more largest economy in dollar terms because of the impact of exchange rate depreciation. So that's essentially what has happened. And we're now seeing Nigeria's debt to GDP ratio at 55%. Now, before you say, it's too much. If you want to compare it to most other countries, for example, Ghana is doing about 83%. South Africa 72%, Kenya 70%. I like to compare Nigeria to these countries because I think these are the countries that are sort of close to our kind of demographic. So you've seen that Nigeria is still below these countries when it comes to debt to GDP ratio. But doesn't mean that it's a good thing. It just means that at least we're not at a precarious level debt-wise. So that is why you still see the government looking to finance its budget through debt, because it feels like it still has room for more borrowing. So this is Money Brief, and in Money Brief, I tend to always tell you what it means for you. So what does this mean for you, basically? Man, I think that at the end of the day, if a country's debt is rising and your debt service to revenue ratio is rising and the government is borrowing a lot so that they can pay debt, it just means that you have to pay more attention to your investments and to your savings, because you don't want to be caught up in all of this situation. So for those who wonder what that means for maybe the exchange rate, whenever you have high physical deficits, the country's exchange rate is typically under pressure. You can go and read that up anywhere. And so we're likely going to keep having high physical deficits. And because the government continues to borrow to fund its budget for obvious reasons, it means there would always be pressure on the exchange rate. That's for sure. So I don't see exchange rate being stable for too long. It's always going to be volatile, except we find other means of funding government business, or we find other ways of increasing our exports. Until that happens, you're going to have exchange rate pressures. And I think our debt levels also, sort of affects that as well. So with high debt levels, it also means that the government will also need to borrow a bit more again. So if you're borrowing a bit more, then these debt numbers will likely increase. And when your debt number increases, then it means you have a lot more debt service to make. So the government will also have to, sort of borrow. Will also have to pay more from its own revenue to service debt. So this also has impact on exchange rate, because it's likely to be borrowing at a high interest rate as well. And if it's borrowing at a high interest rate, forgive me, it has to also borrow from foreign investors, especially here. In fact, the Minister of Finance just said recently that the government was looking approving more external borrowing for the country. So if they have additional external borrowing for the country, then that also adds to our borrowing pressure. I think they said they want to borrow an extra $2.2 billion or thereabouts. So that's going to have added pressure. So that also means that, exchange rate might be under pressure. Of course, the other thing is interest rate. So interest rate could remain elevated, except maybe the central bank decides to push it down. There's chatter that other people believe that, look, there's so much naira out there that the CBN can actually push interest rate down. But hey, there's inflation around the corner, and we all know what's going on with inflation. So if inflation continues to remain sticky, inflation numbers has now hit, I think, 34% or so. So inflation numbers continue to remain that sticky, then interest rate is likely to remain elevated. So in a nutshell, if you're investing in naira, if you have naira investments, make sure your returns is not more than 25%. It's not less than 25% per annum. In fact, I would say comfortably do investments that give you returns of 30% per annum if the investment is in naira. The investment is in dollars, then of course you can always go for returns that are about 7, 8, 9%. And you can always get Eurobonds at about 9% per annum. That's the investment you need to make. Then if you don't want to make any investment that you don't want to see your naira value get eroded, then you have to find a way of investing in foreign assets, either foreign stocks or maybe Eurobond or things like that. Foreign currency investments probably will pay you off at the moment. And that's basically my money brief for today. So again, Nigeria's debt is rising, and so it shouldn't be that much of a concern. In fact, we're 200 million people, and if you spread that debt amongst Nigeria, I think it comes about 600K or so per person. So you're owing 600K. All right, guys, that's my money brief for today. Until we do this again, do have a profitable week ahead. Peace.